Index, holding on to the 100 mark, continues to hurt rupee. And minutes from now, we will be hearing the ECB crucial decision at the policy meet. Investors expect Draghi to extend the Eurozone's quantitative easing program and hit banks with negative, deeper interest rates. Of course, if the stimulus goes through, the euro is likely to witness an uptick along with other global currencies. And the gold prices slump yet again, trade near a 6-year lows after comments from Fed Chair Janet Yellen heightening the prospects of a Fed rate hike this month. In energy space, the crude oil prices rise from near 2015 lows after reports suggest that Saudi Arabia will propose OPEC to cut output by 1 million barrels per day next year, while leaders believe the deal is unlikely to go through in tomorrow's meeting. Starting with the rupee, and it has a range-bound session of trade today. Further weakness in the domestic equities along with US dollar index holding on to its 100 mark is what is hurting the currency. Pramit, CEO of Veracity Financial Services, joins us with his sense on the space. Pramit, hi. How are you looking at the way the currency has been behaving? It has been under pressure for a second straight day, and we clearly are more closer to 67 than to 66.
I think the rupee is showing pretty good resistance against the global cues, the way euro and the pound has behaved against dollar, as well as the way dollar index is behaving. Rupee is showing some sort of resistance. I think the global pressure is going to push rupee towards 67 based on today's outcome, how the ECB is reacting, and based on how a Fed is increasing the interest rate. I think regarding the Fed, it looks like that maybe 10 basis point would be a token base rate increase during this meeting, and then they will see in the next quarter. But I think that sort of a rate increase is priced in, and we may see some sort of correction coming in the last 2 weeks of the month before the Christmas break.
How are you looking at the expectation of what ECB might do minutes from now? Because markets are really anticipating further stimulus and a marginal rate cut as well.
I think the rate cut is going to give some sort of a pressure on euro. I think if market is going to get what they are expecting, then the euro is going to get depreciated further from this level. But I think Draghi is going to take a very cautious step and is not going to fall for the market expectation. So I think the euro is going to remain range bound. Downside 1.0480 level is something we can expect during the volatility, and the upside again euro will get resistance as somewhere around 1.08. So the broad range we can see between 1.04 to 1.08. We may see this range coming during this week as well.
Pramit, also, what's your sense on the US non-farm payroll data? Because after ECB is out of the way today, it's going to be about that number tomorrow.
I think ECB non-farm payroll data is going to be non-event, considering the way Fed has made up the mind to increase the interest rate at the end of the year. Because what we saw 2 years back as well, the cut in the QE3 was started at the end of the year, and they did a token tapering at the end of the year in 2012. So I think the same thing we're going to see here. The interest rate rise will be a token rise during 2015, and that will be in the month of December. But I think both the events are priced in, and the effect of non-farm payroll is not going to be based on make any difference on the interest rate decision.
Pramit, so where do you see rupee the heading? We've started a new month now. Do you see further weakness, further decline? Because everything in the global markets does point towards some pressure.
So if you consider the two different points here, one is the global cues, that how the ECB and how Fed is going to react. So if Fed is going to come up with 10 basis points sort of interest rate, and then that is priced in, and market may get a little bit disappointed with that, and that in that case dollar will get weakened and the rupee will get support. But if there is an aggressive rate rise, instead of 10 basis point, if it's a rate rise by 25 basis point, then in that case we may see a strength coming in dollar, and the rupee and the global currency will weaker again dollar. That can lead rupee reaching 67 by end of this year. And the second thing we have to look at is how the domestic market perform based on the global cues as well as the domestic cues. So I think both these factors will affect the rupee. But right now rupee is pretty much balanced. The local local domestic market is supporting rupee and the global pressure is pushing the rupee down. So both the things are balancing out rupee, but I think the Fed decision will be a key indicator on the further move of rupee. So if you look at December, it could be somewhere between 65.80 to 67.20.
So yes, volatility and some bearishness for the currency, but let's get in one more voice. And minutes from now, we will be hearing ECB crucial decision at the policy meet. Investors expect Mario Draghi to extend the Eurozone's QE program and hit banks with deeper negative interest rates. Of course, if the stimulus goes through, the euro is likely to witness a volatile move higher. The ECB meeting today is ahead of that. You have the euro trading at a 7-month lows. The ECB is expected to cut deposit rates by 0.1%. ECB may expand government bond buying program as well. Currently, it's 1.1 trillion euros, which started in March 2015. Remember, the EU inflation is far below the ECB's target, and if there is no further stimulus, then you might see euro buying coming in as well. The chances of that are really low. And Stannard is head of European currency strategy at Morgan Stanley, and he joins us on a phone line from London. And hi, good to have you. What is your view on the ECB meeting today? Do you see a 0.1% rate cut actually going through?
We see that market expectations for the ECB have continued to build. If we look at the market consensus for the deposit rate, that is currently looking for a deposit rate cut of 10 basis points. But if we look into that in more detail, we see that there is an increasing number of forecasters who are looking for a greater cut in the deposit rate. This suggests that market expectations have continued to move and have become more aggressive, expecting a bigger easing package to come from the ECB. Our own economists are expecting a 10 basis point cut in the deposit rate, and for that to be accompanied by further quantitative easing, an extension of the overall program by 6 months, and also an increase in the monthly purchases as well. These expectations, I think, are now fully into the market. When we look at the interest rate markets, they are fully pricing in, we believe, a potential for a deposit rate cut. And when we look at how the euro is trading against that, also the euro does seem to reflect those expectations as well.
Well, 10 basis points of a rate cut coming in from ECB. And how much do you see ECB expand when it comes to the government bond buying program? Is there a number that comes to you?
Yes, our economists are looking for that to be the program to be expanded, both in the overall duration of the program going through a further 6 months to March 2017. But for the monthly purchases, they're also looking for that to be extended with an extra 10 billion of purchases per month on top of the current program. So that, I think, is in line with many of the market expectations. We also look at how the market positioning has been building as well over the course of the past few weeks since the ECB first announced that they would look at reviewing their monetary policy. And we've seen that euro positioning has continued to build following that announcement. So with regards to the overall expectations and how they've built, together with how positioning has built going into the meeting, we do suggest that some caution is required. We could see some volatility as a result of that over today's ECB meeting.
And if you look at the currency, the euro is trading at a 7-month low versus the US dollar. In case there is no further stimulus, then do you see euro buying coming in today, or are you working with the possibility of that not at all? You do see a stimulus going through, and you do see a 10 basis point of an interest rate cut as well.
Right, okay, well, we are expecting further easing to come through today, but I think there is a risk factor here, given that the market is expecting quite a lot of easing to be announced. Expectations have built quite considerably. This does suggest that there is room for some disappointment if the ECB's easing measures they announced today do not match those expectations. And in that kind of environment, given the build-up of short positioning in the euro recently, that does open the way for a near-term rebound in the euro under that particular scenario. But I think that would be just a very short-term reaction, and would not challenge the longer-term bearish trend of the euro.
Right, parity for euro is the view coming in from Morgan Stanley. And the U.S. non-farm payroll data tomorrow is yet another thing to watch out for. We, of course, are looking at hawkish Yellen testimony today. Do you see that continue? Do you see an interest rate hike coming in from U.S.? Because the divergent policy from central banks is yet another theme playing out.
Yes, with regards to the U.S., following the comments we had from various Fed speakers, including Fed Chair Yellen yesterday, I think there will be a lot of focus on the non-farm payroll report tomorrow as well. This is going to be extremely important. In the speech yesterday, Fed Chair Yellen made it very clear that any increase in U.S. interest rates would be very gradual, but also would be data dependent as well. So there will be a lot of focus on the U.S. data going forward, and the non-farm payrolls is the most important of those data releases. So the data tomorrow will also be extremely important and has the potential to generate market reaction and volatility.
Mm-hmm. Final question, Anne, and how do you look at the European strategy impacting the emerging market currencies, especially the rupee?
Right. Okay. With regards to the overall picture, I think the emerging market currencies are likely to remain under pressure over the longer term, particularly as we go into the new year, under a scenario where the Fed has entered into a rate hiking cycle. Even if it's a gradual hiking of rates, as the Fed is currently indicating, we still believe that has the potential to have a knock-on effect through emerging markets, particularly into the Asia region, if it starts to generate asset market volatility and starts to cause a slowdown in portfolio flows. So we think that the higher beta emerging market currencies, and particularly those which have been supported by portfolio flows, could come under some further pressure. And in that regard, the Indian rupee would come into that category, we believe.
All right, so Indian rupee expected to be under pressure as well. And thank you so much for joining us with your view. That's the view coming in from Morgan Stanley, that we are perhaps looking at some stimulus continuing from ECB today. Pramit, the final question from you as well before we let you go. How are you looking at the global cues really playing into the currency? Yes, we are looking at some bearishness in the rupee, some pressure, as you mentioned as well. But going forward, I mean, we are already 5.5% down on the rupee for 2015. Do you see further pressure? Do you see it spilling into 2016?
I think that is going to based on two events again, how the global markets are playing, because right now the biggest pressure coming on the global currencies is from China. The way their numbers are shrinking, global currencies are getting pressure of that, and specifically commodity currencies are not performing well. And the second thing is based on how the Indian economy behaves. So both these things will play a role. I think inherently the Indian economy is showing a good sign, and the rupee is getting support from the Indian economy. But the global pressure is going to come on that as well, and we'll see somewhat of effect coming from that. So overall, I think the rupee is going to remain under pressure, but we're going to be better off compared to the other emerging economic currencies.
Point well taken, Pramit. We'll let you go as well. Thank you so much for joining us. That's a view really coming in from Veracity as well. And of course, minutes from now, while we are still awaiting the ECB meeting, we will take a short break. When we come back, we'll put focus on the commodity space also, which also seems to be taking an impact and awaiting the ECB.